Hello and welcome to another update video about ADA Cardano. So we are coming down a bit lower. We haven't made a new low yet, but that would be ideal in this ABC correction because it can't be an Elliott wave triangle anymore. Well, it could still be a very large one. No, it can't really. So we don't want to really. Well, it could be. It could be. You could still count this as a triangle, but there's currently no evidence for it. Triangle would be A, B, C, but it would need to stay above wave A. Then D, E, and then we go up. Doesn't really matter, probably not. My view is that the only thing it must not do in this particular wave count is to get below the low of the 38.7 cent level. So it should not get below that support box. Yeah, should avoid to drop below 38.7 cents because it would be less than ideal for this wave 4. The wave 4 target is ideally in this box. We've come into this twice now. Before we should push up in wave 5. Now again, if we draw the fibs, you get to this level here, and it is 38.7 cents to 40.3, right, in this area, with an ideal level being the 38.2 retracement at 39.4 cents. That would be the ideal level. Could very well be that we come down and hit that support level, that channel, right, that we had here. Probably need to draw that a bit more accurately, but it could be because this will perfectly touch the lower support, right? So it could be we come down, touch it, boom. Just an assumption, right? But this is currently looking okay, yeah. In an ABC correction, it's always ideal to get the C below the low of the wave A. I think we might get that. What I need to say, it could be, and this is not clear, it's not my primary expectation, that's why it's an alternative, but it could be that this wave 5, which I have here, was already in here, and that we did 3, 4, 5, and now we are in green wave 4 and will only move up once more. But it's not primary expectation. The reason why I put this on the chart is because this spike was a little bit higher than that wave 3 high, and that makes me consider it to be a wave 5. It was not an impulse, so it would have to be an ending diagonal or something, but I find it more likely that it is an overshooting wave B because it's only a very short wick, and if I want to see a wave 5, it should normally push a bit higher than the wave 3, right? So it wouldn't even, in the end, it wouldn't make a great difference to the chart. If it does anything unusual, I will consider that more closely. But for now, I expect this was A, this was the B, and we're now coming down in C. And at some point in this area, I will expect the reversal to the upside. Maybe we come down all the way to 38.7 cents and then push up in wave 5 of 3 or in wave 5 of 1. That's what's not entirely clear. But generally, I think we are fairly close to getting exhausted here, but I don't think we've seen the high yet. I think there will be at least one more push to the upside as per the Elliott wave count to finish off this wave 1, and then there will be this wave 2. So I think this should make clear, this video should make clear the key support levels. When do I think it will get, when do we get the signal, or what would be the signal that we are breaking to the upside, that the wave 4 is finished? I think the earliest signal that you would get is the break above this previous swing high. That is not a confirmation as 40.9 cents, but it is at least an indication, and then we would need to wait for the break above the wave 3, which is at 41.7 cents. And I think we are sliding a bit, you know, generally the market is sliding a bit. ETH, for example, is still holding okay-ish, you know, there's nothing really, no strong move down, you know. We've just pulled back to support, as you can see here, the previous low of the wave A. If we look at the indicators, I don't know if they help us really a lot. We've come into the bearish range on the 1 hour, but it's only the 1 hour, not very relevant. Here we had a bearish crossover. I mean, that would rather confirm we come down a bit lower. We were overbought, so you expect that retracement, which we did expect in wave 4. Let's see how far that comes down. Let's add the MACD. For some reason, I don't have the MACD on the chart here. Yep. So that's the MACD. It has just done a bearish crossover. That's not a bullish sign. I think that rather shows that there is downside momentum, and I would be in favor, as I just said, of lower lows still, making a low below the low of the wave A before we then come to the upside. So that's all looking good, yeah. Bear in mind, tomorrow we've got the PCE data, the inflation data release. That will be relevant. It is a very relevant metric. Maybe not as widely anticipated as the CPI data, but very similar. So that could shake up the market a little bit tomorrow, and we will possibly, because that sees some short-term extensive movements. They wouldn't normally change the trend, but they will lead to some movement. Important, in my opinion, is still that this wave 4 does not go below the 38.7 cent level. Below that, again, it would be less than ideal, and it would seriously challenge this breakout. Yeah. So yeah, that's my update about ADA. Not much more to comment here. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.